What if I told you that your money could pay you every single month without you lifting a finger? Imagine this. You invest $10,000 once, and it keeps sending you cash flow year after year. Sounds too good to be true? Well, that's exactly what dividend investing is about. And today, we're breaking down how much income you can really make from a $10,000 investment and how to make that number grow faster than you think. Hey everyone, welcome back to the channel. If you're new here, we talk about smart investing, personal finance, and ways to build real wealth that actually lasts. And in this video, we're diving into the math, the strategy, and the mindset behind dividend income, so you can see exactly what's possible and what's just hype. Let's start with the basics. A dividend is a portion of a company's profit paid out to shareholders, kind of like a thank you for owning their stock. The key metric here is the dividend yield, which shows you how much income you earn compared to your investment. If a company's stock costs $100 and pays a $4 dividend per year, that's a 4% yield. So if you invest $10,000 into a stock or ETF with a 4% yield, you'll earn about $400 per year in dividends. It's not retirement money yet, but remember, we're just getting started. Now, what if you go for higher yielding investments, say 8%? That same $10,000 could generate $800 per year, or roughly $67 every month. That's dinner money, utility bills, or an extra payment toward debt. But, and this is important, higher yield often means higher risk. Companies offering 8 to 10% dividends might not sustain those payouts forever. So you need to find a balance between yield and reliability. Here's where dividend investing gets exciting: compounding. If you reinvest those dividends instead of cashing them out, your returns start snowballing. Each year, your dividends buy more shares, and those new shares generate more dividends. For example, if you earn 4% a year and reinvest, over 10 years, your $10,000 could grow to more than $14,800 without adding a single dollar. And if you keep contributing regularly, that growth multiplies dramatically. This is why patient, consistent investors often outperform traders. Time and compounding do the heavy lifting. One of the biggest perks of dividend investing is stability. Even when markets are volatile, many companies continue to pay or even increase their dividends. This creates a steady income stream, perfect for people seeking passive income during retirement or just financial independence. Companies known as dividend aristocrats, firms that have increased dividends for 25+ consecutive years, are often the safest bets for this strategy. Think Johnson & Johnson, Coca-Cola, or Procter & Gamble, slow and steady wealth builders. Of course, don't forget about taxes. Depending on where you live, dividend income might be taxed differently than capital gains. In the US, qualified dividends are taxed at lower rates, but always check your local rules. A smart investor doesn't just look at what they earn, but what they keep after taxes. So how should you invest that $10,000? Diversification is key. Don't put it all into one stock. You can build a portfolio of 10 to 15 reliable dividend payers or choose dividend ETFs like SCHD, VYM, or DGRO, which spread your risk automatically. You want a mix of high yield and stable growth stocks, so your portfolio both pays you now and grows over time. Let's be honest, $400 to $800 a year won't change your life overnight, but it's a foundation. When you combine reinvested dividends with consistent investing, say adding $200 to $300 monthly, you can build a portfolio generating thousands in passive income over the years. That's how people eventually replace part of their salary with dividends. It's not magic, it's math plus patience. So, can $10,000 make you rich from dividends alone? No, but it can absolutely get you started on the path to financial independence. The key is to start early, stay consistent, and let compounding do its work. Thanks for watching. If you found this breakdown helpful, drop a like, hit subscribe, and let me know in the comments, what's your dividend yield goal for next year? See you in the next one.